Then I'm in the higher time frames as well. Right. This is
and you have a VIX that goes higher despite what? And I think this is super interesting, UVIX, which is really no love there today. But what did you start seeing with the VIX today? Well, the VIX is going up and the S&P is going up and the Nasdaq's going up. All right, well, one of these kids is doing their own thing, right? So why are you buying protection if we're going to keep going higher? They usually don't do that. And when you watch people buy on the VIX, even though it's nuanced like this, you really want to pay attention. And there's different ways to do it. One person was talking to me today about the call ratio of it. That's one way to do it. There's other ways to do it as well. The VIX, I tend to look at, which is the VIX volatility, the volatility of the VIX. You can sometimes look at it this way, kind of like reading the tea leaves. And then what you're looking for is you're looking for rallies. So if you start seeing rallies off of this, it does start to tell you a different kind of story. And we're starting to see what we're going to get here. Maybe see the drop in here, and now we're starting to get a rally. It's telling us that we're seeing a shift, right? So we want to watch the shifts. It's not just about up or down. It's more to do with the shifts. We can do it in another video. We'll recover it. But so when we look at this, we want to pay attention to it. All right. So then we take a look at the NDX, and we would say that we are over that first fifth. Is that enough? Is there anything else that we'd want to use? Well, I'm glad you asked. There's something that I tend to use when things get, as I refer to, goofy. Now, in front of you is the NDX with fib levels, but I'm going to take that all off for a second. And then you're just going to see Bollinger Bands. Now, these Bollinger Bands are just the first, second, and third standard deviation. It is not some new thing that I've invented. They're just Bollinger Bands, and then I just set them to a 1, a 2, and a 3 standard deviation. You can see how wide they are, and there's something about the variance of a Bollinger Band that we could get into. But if we took a look at this, the one thing that you can always tell about with Bollinger Bands when they get this wide is you're looking for a change in trend from what you were experiencing. And I don't want to, again, it's kind of complex, but like, see how wide they are? It's just insanity. Someone can say that insanity, isn't it? So when it's like this wide apart, for example, if you went here and said, okay, the Bollinger Bands are 25% apart, like that's pretty darn wide, right? So we'll take that low and we'll go to that high, and I get you 27%. All right. And then if you went into here, and again, you had a change in trend from that, didn't you? Right? You were down and then you went, right? And then the Bollinger Bands get tighter. So then you look at some of these and you're like, all right, well, what's the difference between these? All right, that's 32%. Well, let's get it exact here. So that's 32%. Okay. So the variance between the third degrees are what? 32%. Let's take this here, which was just absolutely insane, and you get 36%. So anywhere between 25 to 36% on average, we're seeing something where they then will think about a rubber band and a rubber band snaps back. And then you come over here and you go, all right, well, what do you have here? And then you're measuring this off and you're like, okay, well, that puts me at 22% roughly, right? Let's get to the high of that. So you're not out of the ballpark on the variance between the spread between those two, right? You've seen that variance before and it's gotten greater, right? So that means that this has the possibility to get greater as well. Again, it's not an exact science. What you're trying to do by looking at this is understand what's going on. I don't care that you're hitting the second one, because you can hit the second one and just ride it. What you want to watch is when you start looking at these weekly charts and you start hitting the third one. When you start getting up into here, it definitely becomes an issue. It's no different than when you were here and you're hitting that third standard deviation on the downside. When you start hitting a third standard deviation on the downside, you're pretty much done. When you start hitting it on the upside, you're pretty much done. Right? You can see this November 21, and you're starting to hit that. If you really go back and look at this, at no time did you really hit that standard deviation except in here. You started hitting it. And you could really look at it right there. So once you see that, it's a big deal. And you can go through it, you'll see them, but it's not very common. Remember, these are standard deviations of moves. So when you get to those, it's really like you got to be really aware of it. So are we getting there? Yeah, you are getting there. And whether or not we hit that, it doesn't need to hit that to roll over, but that should be on your radar and you should be watching it. So that's the second thing that I think we have to be cognizant of. And again, it doesn't mean that the sky is falling. Far from it. Earnings are fantastic. No matter how you look at it, earnings are fantastic. But that's a lot in a very short period of time. So then if we look at here, and we just take a look at the market and go, all right, well, where's that put you? 8%. All right, well, what if we don't drop 8%? What if we don't correct 10%? What if you came down to something like the breakout of that bar, right? And where would that put you? And if we just looked at from that level down, where's that put you? All right, 4%. You did it in 5 days. You take the stairs up, you can take the elevator down. It's out there. And we know it's out there by the way that this is setting up. They're buying the VIX, and we know that they're buying the VIX, right? We're watching that. If we take a look at Move, they're not really that concerned about it. What are they doing with the 10-year? Well, all of a sudden we're going to have world peace, right? So let's see how that goes. So let's tie this all together now. You cannot look at this chart and say that, oh, we're definitely going to come down. What you can do is say, we've come far in a very short period of time, and anything could kind of set us off, right? And have a cascading effect. And so what I always look for is sentiment changes, meaning when you've gotten that, just think of the opposite. When you have really bad news and nobody cares and they buy the stock anyway. When you have really good news and nobody cares and they sell it anyway. What is bullish or bearish sentiment, right? Just remember that, because it's a really good guide for what people are thinking and what they plan on doing. So when I see something like this, what I tend to do and what I want to look at is I want to just look at it as like the whole piece. So I'll go and take a look at NDFI, and I'm talking as how I would look at the market right now. And when I see something like this, for me, and what I'm seeing is there's a high, there's a lower high, and that's the NDFI, which is the 50-day. So what I have here is I have NASDAQ 100 not broadening out as it's rallying. So in other words, the same names are going up and they're not broadening and they're not participating, which is one of the reasons why I've been saying in the community to people, the easiest way to play this is just the ETFs, so that you're not out there trying to figure out which name that you should buy. SOXL, which is down considerably. We'll talk about that in a minute. That's $4 back in the high of 170 or near it. I think you have to look at it that way. And I think you have to realize that they're going to rotate through them. The function of this is, again, it's very hard to look at this and just say, oh, well, clearly we're at this, so we're going to stop. You can stay up here for months. But when the breath deteriorates, that's what you really want to pay attention to. That's where we have to look at this and say to ourselves, all right, what exactly are we doing here? And I think that that's super important. Now, on the flip side, if we look at how earnings were perceived yesterday, AMD had good numbers. They were good, right? They beat revenue by 3%. They beat earnings by 6%. The stock was up 33% today on that. And people guided higher because they came out and said, we're going to grow for the next 5 years. No one's saying that they're not going to grow for the next 5 years, and no one's saying that they're going to do this. It's going to be fantastic. I'm not arguing that. Let's say that it is. Does that justify the move that you've had in the past 3 months? I would argue that it doesn't. And the market doesn't care. I'm going to trade it either way anyway, right? We shorted it today, and then we got out of the way. It was a very simple short. I want to go through this, so I'm not going to show live trades. But if we took a look at last quarter and you look at where you are this quarter, you're up 121%. It's not like a $100 million market cap company. It's a big freaking company. So you kind of have to look at this and go, all right, well, that seems pretty darn excessive. And it's very clear that they're chasing things. And when people chase things, it tends to come to an end if there's an overvaluation there, right? No different than looking at something like PLTR. This was a fantastic quarter. And what happened? The stock sold down. Why? Because, you're trading at what, 100 times revenue or something? It's like insanity where the valuation is. And they'll grow into it. And maybe as they grow into that valuation, what will happen as the revenues grow into it, right? Then the valuation will flip. And you'll find like an inflection point somewhere. We just don't know where it goes. But they're not going to not grow. Same thing with AMD. Like, I don't think that the AI thing's over. I don't think it's a quote unquote bubble, so to speak. People keep saying the word bubble without even understanding what that is. I think you have to look at it and say to yourself, is that justified? Could we not gap fill? Right? Like, this is kind of where I want people to think. Like, if you're like, hey, Rocky, where are you going with this? To the idea that you could come in and you could gap fill. And you might be able to buy these things cheaper instead of chasing them like everybody else that's chasing them right now and not making any money, and they can't figure out why, right? Because it's not working the same way. And there's a reason for that. The next thing that's going to happen to people, mark my words, they're going to start buying options, and then these names are going to move, and they're not going to figure out why they're not making money on the options. It probably actually started today where people didn't make as much money on the options. And you're going to be like, oh, I watched this dude on YouTube and he's fantastic. And he was explaining it's because the VIX is rising. So the implied volatility of the options is actually going up greater than the movement of the stock, right? Okay. So how do we tie this all together? Well, we would just look at this and say to ourselves, well, the SOXL, for example, is up, what, 60%? I mean, we bought this thing, I think, April 24th, of something that we paid like $90 for it. We had a trade down here too. But we got back in, paid like $90 for it. I think we're up 70% in like 2 weeks. It's ridiculous. The reason they're moving is not ridiculous. I want to say that. The earnings are there. Like the earnings are crushing. They're way better. Intel's quarter was way better than anybody anticipated. Like no one was even close to this quarter. Even someone like myself has to admit that like it's not the big that I've been calling it forever. Right. And I'm long it. I'm like, yay, Intel. But you have to realize that that's still a huge move over a very long period of time. So these names can come in. And that's going to lead us to, is that why we're starting to see people play the IGV names? Because they're looking for where they're going to put money in more the value tech. Again, I'm not saying that you're going to collapse. I'm saying that I do think that you are at way more risk here than people think that they are. Because you look at something like Oracle, and when Oracle, I'll show you what we did here. So Oracle gaps up and gets over right here. And I have a very long-term Oracle position. So I added to it like right here, and then I just leave it on. I don't want to touch it. I look at it, when I say long-term, at least a year, I'll leave it at that. So now we're breaking out. Okay, great. What do I do with it? I won't do anything with it. Why is Oracle moving? I think they're looking for the beaten down value names. That's what I think they're starting to do. They might start looking at Microsoft as well. But what we're going to do is now tie this all back. So what do you do here? Well, why is the SOX down? Well, why is AMD down, $8, right? Why are these names down? All right, so then I'm going to go to ARM. And ARM had earnings tonight. We're going.
So sometimes,
Next.
try it again. You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Oh,
The bulls for the SPY are doing exactly what we talked about they need to do right now. They need to squeeze through, or else you're at risk of confirming and really starting to roll over for a potential daily pullback like we talked about yesterday, or even a daily retracement. Now, this squeeze is a good thing, and this is how we extend to the upside. We're going to talk about that, but there are some things we talked about yesterday that I think are important, and some of those signals do not agree with the SPY. So while the SPY is saying one thing, there are some signals behind the curtain, or if you're not aware of them, they are saying kind of the opposite. A lot of the signals that I'm going to show you right here in the intro are suggesting that this to the upside can be a trap. So we are going to go over those things very briefly. Now, first, this doesn't really have anything to do with it, but this is a speculative chart as of right now. The reason I'm going to call it speculative is because we have major daily reversal signals here, if that's able to confirm. And we were right to pay attention to those 4-hour divergences in the near price action. And look at that, the 10-year yield starts to drop off. I do talk to some MLOs and things like that out there, and I think it's really funny because all the MLOs, they never message me down here. They always message me when the US 10-year or the yields or the rates are at highs. I just find that kind of interesting as far as human behavior goes. But we do have those daily divergences on the MACD and RSI suggesting and confirm that we can see a full reversal here for the 10-year. The reason this is speculative as far as what does this mean? Is this good or is this bad for the market? And the reason behind the 10-year yield dropping dramatically, if that even comes to fruition, right? These things can fail. But I'm saying if the 10-year yield does drop off, why is that happening? And is the market celebrating it or not celebrating it? And I think we'll find out very, very soon. But something that does, where I'll get on some clues in the market right now, and it's not speculative, is the dollar. If the dollar came down to these type of areas, and actually today we fully formed that potential divergence point. So that divergence point is formed right now. We'll see how it performs in about 2 hours when it does close. But you can say there's potential divergences at this point. So potential divergences with the double bottom right at that trend line. Can this turn around? Do we have a signal that suggests that? Yes, the 4-hour chart here with the divergence on just the MACD. Very clear here. This is just on the MACD. This can be a reversal signal here if it wants to be, but for the time being, we have violated slightly on the RSI, just slightly. So I would be paying attention, but it's funny that we create those divergences just like we kind of did over here on the MACD. Now, not on the RSI at the same time with this one, but this is very close to the center line. And if the dollar is able to go into a positive trend, that would mean that more people are most likely flying into cash. And when you do sell your stock, what do you sell it for? Cash. So if the dollar starts to climb dramatically in the next few seconds, just know that most likely you are going to see some kind of downside for the SPY. Remember that we're still paying attention to it for the daily pullback, for the daily retracement, but we have to see who wins this battle, right? There's kind of a battle between other signals and the SPY. The SPY is saying, yeah, we're going to squeeze higher, while these signals are quietly, I would say flashing yellow as the dollar has confirmed this. If it confirms, you've got to say people are potentially going into cash and out of stock. So watch out for that. The other thing I wanted to point out was something we're going to talk about a lot in this video. It's right here. Now, Patreon members, we made you aware of this morning, especially as we get outside of that weekly expected move. We made you aware of this. We're going to talk about it later in the video, but this is another signal that disagrees with that squeeze from the SPY. Someone is continuing to hedge now, especially at these levels. And we talked about a potential divergence here, and the divergence starts to pop up. We'll talk about that in a bit. The big deal here is we are looking for the next really good opportunity, not one that's complex with a bunch of divergences during a squeeze. We're looking for the obvious opportunity, and I believe the obvious opportunity would be on a daily pullback or some kind of daily retracement. So I think the first thing we need to do here is talk about these weekly expected moves, talk about the SPY, and update your daily expected moves. Talk about some decision making. Let's get into it. I'm going to say the scary thing here. All right. I am going to say the slightly scary thing, and it's not necessarily something that I'm really like leaning heavily towards or anything like that. But you do see potential divergences on higher time frames, especially when you go into the SPX 500. So that does suggest like, hey, if we do get some kind of bigger downside move, be prepared for a roll just in case. Okay, I just want to say that some of the signals out there, and it's not saying that has to happen. I'm not changing what I think is going to happen. I still think that the daily pullback, daily retracement are the next really good opportunity, and I most likely will take that opportunity because I think that we most likely will make highs. I think that we're genuinely going to climb up to this 8,000 before we see anything really bad. But there are some signals that are suggesting, hey, just in case you do get down here, pay attention if we make a lower high, because we can head down to take care of gaps. We can see big things from the weekly chart, especially if those signals confirm. We will talk about those on Saturday when we get into the bigger timeframes. If you would like to subscribe and join us for our Saturday macro update, that would be fantastic. Monthly expected moves, weekly expected moves. Why do we use them, right? They are great guidelines. These are great guidelines. They act like magnets, and they tell you when the market is doing something a little irrational, it might need to take a breath. The day today is Wednesday. We have 2 sessions left for the entire week, and we do notice that we are outside of the weekly expected move. We will be putting out that video. I know I said Monday. We're going to do it on Saturday. We're going to discuss closures outside of weekly moves and why they can happen multiple times in a row at key moments. We're going to try to do that for you. A big deal here is decision making, right? When you come up to these levels early on in the week, and let's say I was bullish right away in early parts of the week on that 2-hour confirmation, I go, okay, the 2-hour has confirmed, so therefore I'm going to ride this to the weekly expected move. In this area and with the state of the market right now, the potential for risk, that volatility signal, we're going to go
amazing means Robert gets to meet his grandson for the first time.
It's got like some heavy bass to it, and I don't know that it necessarily fits the mold. We'll see. Maybe it's some kind of a This stream is sponsored by Trade Brigade, engaging entries, saluting stops, and triggering targets. Something like that, you know? We'll see. Anyways, 4-hour time scale for the ES. What do we have over here? We've got ourselves a solid uptrend in the back. You know, nice continuation into the top end of the move. And, you know, we'll see. We'll see. I mean, just like, I sound like a broken record. That's it, right? Sound like a broken record. There's plenty of room for a higher low. This looks awesome. This looks great. Stay over the 20 SMA. No problem. That's it. That's it. Right. Okay. From there, what do we do? We take a look at the hourly chart. And we, on the hourly, can clearly see, you know, maybe there's actually a little bit of a reason to add in this gray bar right here. That's on me. It was just the previous all-time high level, so that was why it was not a gray bar, but now pop in there. You know, 7,300, fine. We do have this unfilled gap. My God, did I really not do that much work last night? I suppose not. I am sort of in the middle of doing something in the after hours, which is a little bit. Yes, but anyways, it starts on in yellow. And just make sure we've got our gap on there. Oh God, that's on me. Let's go ahead and bump this out to the 30th. That does the gap. All right, that feels a little bit better. That feels a little bit more like it on the hourly chart. Trend is up, right? Trend is clearly up, no problem. You got your lows, you got your higher lows. You got plenty of room to pull back, close the gap, higher low, right? Something that looks like that. Hourly trend remains in the upward direction, no problem. No problemo, right? So that's what we got there. And people like the trap music. All right, fine. We'll let it go. We'll let it go. Higher low there over the gap fill reversal 7,300. 7,300 is the number to beat on ES futures from the hourly chart perspective. As long as we're above that, really no problems over here in the ES. Right? We've got 7,300 higher low gap fill reversal. No problem. Where was it? Somebody said so many gaps. So many gaps. Where was it? Where was it? Fishman says so many unfilled gaps. Yeah, there are. There's a lot of unfilled gaps, but you know what that's characteristic of? A strong and very bullish market. Right? Very, very bullish market. A lot of activity happening overnight, and buyers just want to get involved. Right? This is like the lockout rally of all lockout rallies. One thing that might be interesting as a comparison, and maybe I set this up as a section of the Saturday update video, but I talked a little bit about it last night. You go on back to the NASDAQ and go out to a max available daily chart. I'll look at this really quickly with you. This I have to imagine this starts feeling like why is this not looking? Max available back. User error. Go back over here. Like to me, I have to imagine that what we're getting right now, like as it seems to me, is maybe like this breakout right here, and the market's going to grind, and like you might not ever for a while get a pullback for that previous high, right? I mean, if this is the April tariff debacle from last year, we went to a major new high, right? We got that little extension. Here's your consolidation. Like if this is early stages, 99, late stages 98. This is really just possibly the start. If you think AI is going to be bigger than the .com era, just to give you an idea. Now, the alternative argument would be that no, we're technically here, or like we're here, right? I don't necessarily think that's the case. To me, it feels more like here, right? It feels a little bit more like right there. Anyways, that is what we got out of the NDX comparison. Again, maybe it's worth doing a little bit of a deeper dive into that for the weekend video. Let's get just back focused on the ES futures hourly chart here. Trend remains up. 7,300 has ourselves a nice opportunity for a higher low. Right, 7,300 right there. Okay, moving down to the 15-minute time scale. Let's see what's going on from this perspective. What do we see over yonder? We've got pretty straightforward price action. I mean, this was your overnight high, right? Kind of just did a flag near it and then continued into the afternoon, closing at a brand new all-time high. So as it relates to the overall movement of the market, it seems to me that we've got ourselves buyers in control. We've got solid action through the overnight, offering a continuation. Even with ARM earnings, I do think it's worth bumping over here quickly because it's been such a key component of the semiconductor narrative right now. See how ARM earnings are straight up, then straight back down, and opening a little bit weak down here towards the previous day's low. I mean, it's not like a blowout gap down. Oh my goodness, 182 and the world's ended. But we are opening slightly lower, right?
With the likes of Anthropic, OpenAI, and SpaceX.
I think the market is going to react in a more nuanced way. If you, the examples you gave, I would also throw in some of the AI infrastructure names, like Cerebras is about to IPO. You can look at some of the companies that are about to announce earnings, like CoreWeave and Nebius. And I think what you're seeing is not just growth at all costs anymore, because what investors expect from these names is big growth, big losses, the investor demand for AI. The demand for AI is proven, is more nuanced now in terms of shifting to what is GPU efficiency, what are some long-term contracts, what are real. And I think companies that can show that they have long-term recurring repeatable revenues while controlling efficiency around the compute will still be favored in the market.
What's been the reaction in space of the security following what's going on with Mythos?
Security is a big topic, and this fits into the broader picture is as AI now becomes more mainstream, you have implications, right? These powerful tools, including Mythos, is being put into the hands of the users. These tools are affecting the way we live, we work, we play. So we need other solutions in order to protect our users from the influx of these AI solutions in terms of security. So us here at PSP, we're bullish on the security sector as well. We have two portfolio companies in the space. One is a company called Zafran. They detect in enterprises vulnerabilities from everything from old threats to the newest AI threats, and we rank them, and there's an agentic capability to mitigate them. We have another company called Cinder in the space. What they do is they make sure all the content is trusted and safe and moderated before it gets delivered to the users. So I think security is a big piece of the puzzle as AI moves from experimentation to being more mainstream.
It's going to be a much, much bigger piece of the puzzle, that's for sure. Mame, I appreciate your time. Thanks for jumping on for us. Mame Q then of PSP Growth on the difficulties of Meta, the success of Alphabet, and where does Microsoft fit in? That's a big question right now.
Yeah, especially because they didn't see the same kind of cloud growth as some of the other players did in the US in particular. And Google, honestly, Microsoft seems to have it sort of goes in a cycle, right? So the ones that get beaten up, are they going to pull a Google? Are they going to pull an Alphabet? I don't know.
What a turnaround from Alphabet.
I still wish we can. You can't talk about it enough.
Crazy turnaround. Up next, jobless claims in America. Nita Richardson of AVP reacts from New York City. You're watching Bloomberg TV.
that is moving to the downside, down 9.5%. It said that the war in the Middle East is having a negative impact on ad sales. We're going to talk with the Mountain CEO, Mark Douglas, in the next hour, so we'll ask him about that. Peloton raised its outlook as commercial sales climb, and CEO Peter Stern sees progress with his turnaround strategy. Celsius earnings, though, showed strong demand despite more competition in energy drink markets and wobbling consumer sentiment. I love me a Celsius, those shares up 2.5%. Coming up, more retail earnings. McDonald's sales growth doesn't meet estimates, but it sees growth outside the US. We're going to have more on the sector coming up next. This is Bloomberg Open Interest.
Thousands of American Marines are heading to the Middle East.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Brought to Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Jeddah report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you
The
need.
United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this week is. In season 2, we're mistakes or danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this earth. Right now, we do not. More science.
We're pushing envelope technology in multiple directions: software, hardware, chemistry, physics.
The cable, it's like very cool.
More CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There's a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get a look at your high interest stories this morning. What's making headlines around the world? U.S. Secretary of State Marco Rubio is visiting Italy, where he met with Pope Leo XIV amid a renewed clash between President Trump and the Holy Leader. The Pope is reaffirming the church's anti-nuclear stance and a focus on peace, adding tensions to a delicate diplomatic visit. Rubio is expected to meet with Italian Prime Minister Meloni tomorrow. And GameStop CEO Ryan Cohen says eBay suspended his account after he tried raising buyout cash by selling personal items. Everything from used socks to a square of a carpet from GameStop. The stunt pulled in tens of thousands, but critics say it's nowhere near enough to fund his $56 billion bid for eBay, which remains highly unlikely. Federal prosecutors charged 30 people in an insider trading ring tied to confidential M&A tips from major law firms. Authorities say a former corporate lawyer helped steal deal information and pass it through a network that made tens of millions in illegal profits. Prosecutors say the group used burner phones, encrypted apps, and code words like rabbi to hide the scheme. In earnings,
McDonald's earnings per share topped estimates, but sales growth fell short of expectations. Shake Shack and Papa John's revenue missed estimates as consumers turn cautious and food costs rise. Bloomberg's Red Brown covers consumer stocks and joins me now. McDonald's is back higher again, and the earnings were solid, but it seems like there's some nervousness around the commentary we've been getting from them.
Yeah, the CEO or excuse me, I don't know if it was CEO, but one of the managers, someone in the street on the call said that they're seeing a meaningful consumer sentiment decline in the second quarter. So early indications that consumers are starting to feel some of the effects that we've been talking about for a few weeks, but haven't really seen show up in earnings necessarily. But to remember, with McDonald's, you get a really great insight into a lower income consumer who's going to feel these pressures most acutely. And I think that's what we're starting to show up, and probably what's we're seeing the reaction to.
And that's the thing. There's been a lot so that the consumer is really strong now. The macro data has been really good. And yes, some of the earnings have been really good. But then you also have a Shake Shack, for example, that earnings were not strong and they're not necessarily the value consumer. Does that not pretend that it's not smooth sailing, that there are some weakness in pockets for this consumer?
Yeah, I think Shake Shack is a great example of like how companies are figuring ways to manage this. They didn't pay
Much of this is really just about a period of margins getting squeezed that we're about to enter.
Yeah, I think there's going to be quite a bit of that. And I think what we're going to continue to watch for this earnings season is what McDonald's is talking about right now, which is the consumer side of it, because that has been where the question marks have been, right? We understand that costs are going to be, immediately rising. Companies can do a lot to mitigate those costs. There's not a ton that they can do to mitigate if consumers are just not showing up.
Yeah, a really good point, Red. Thank you so much for joining. A lot of earnings to cover. That's Bloomberg's Red Brown. Coming up, Bernstein's Alex Chaloff sees more upside for stocks as we continue to see record after record for the S&P 500. He's going to join the show coming up next. You're watching Bloomberg Open Interest.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology. Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last minute.
On-the-ground perspective.
Looking to you from the Bull Shelter.
It's White House, still pushing.
And the analysis you need to make informed decisions fast.
Nothing is final until it's well and truly final.
The really important question is whether we'll get second round effects.
Nobody covers geopolitics like Bloomberg.
What is going to be the consequence of U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Stocks are an all-time high, and Bernstein's Alex Sholoff sees more room to run. He writes, this is not a late cycle corporate environment. The combination of high capex, strong shareholder returns, improving margins, AI-driven productivity, and durable demand is inconsistent with a typical late cycle slowdown narrative. Further support to move higher. That's important and consistent, not consistent. Joining me now is Bernstein Private Wealth CIO, Alex Sholoff. Alex, thank you so much for joining. And it is remarkable to look at the type of earnings we've seen, that the uptick and the estimates going forward are something that are consistent with coming out of a downturn into the upside. How did we get to this place?
It's wild this year. We came into the year thinking we'd have 10 to 12% earnings growth on the S&P. Now we're 20, 25. I saw 27 and a half. It continues to move higher. It's all really focused in this AI ecosystem. If you look at the breakdown of what sectors are producing the biggest earnings growth, it still is the tech trade.
Can we keep that up? I mean, there's something from Hussman Strategic Advisors that basically said the current forecast, especially for next year, implies sales growth at roughly 2 times the expected pace of GDP. And as I mentioned, historically, that happens when we're coming out of a recession. So can we continue at that kind of pace, at a pace that just based on history, we rarely are in this type of cycle, in this place in the cycle?
That's right. I think the last time we saw earnings growth like this was coming off the bottom in 20, and then you have to go back to the GFC and post GFC to see this type of growth. But this is, as I note, a re-acceleration. This is, we had a little bit of a mild pause, and then we've taken off from there. I think we can continue. If you look at the AI spend amongst the massive hyperscalers, there's real dollars being put to work, and they're not saying it's just a 26 phenomenon. They're putting out a 5-year plan where they're going to spend trillions of dollars on this.
How much does that mean that it is a concentrated earnings, that it will be on the AI spend, especially because if you look at, okay, for example, a data center, in order to construct it, you get thousands of people come in. But then once it's constructed, you have like a couple of people around just running the HVACs or whatever it is. So is it something where it's like what's good for AI isn't necessarily good for the entirety of the labor market, and thus things like consumer stocks maybe not look as attractive?
I think if you're just looking at data centers specifically, or something like that, where there's a one-time spend, then it's hard to see that recurring over time. There's some pessimism around that. But if you think about the productivity gains that we'll get from that AI spend, it's not just the 3 guys at an HVAC. It's the fact that that data center is powering a massive part of the grid that then providing productivity gains to companies of all types.
Yeah, but isn't productivity gains also fewer employees, less people working, less people getting good wages?
Absolutely. I mean, that's the canary in the coal mine. This cycle could be the labor market. You know, we've seen some wage growth pull back. See net new job creation has come down. We're going to get excited tomorrow if we have 75,000 net new jobs. So it definitely is making corporate America pause and say, what can we replace with AI? But as we saw with the internet,
there is that type of pause where people think, okay, there's going to be some replacement. And then the next reacceleration is when you can use that power to actually create new jobs.
Okay, Alex, you're going to stick around with us through the opening bell, which is coming up in just under 4 minutes time. And to check on futures ahead of that, we still trade at all-time highs. We're up just 0.1% for both the S&P and NASDAQ. A decline in oil prices, that's also helping to boost us higher this morning, down by nearly 4% as 10-year yields was lower by 2 basis points. We're waiting to see whether a one-page memorandum can be agreed upon between the U.S. and Israel. On the other side of this break, we'll have your opening bell.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders? It was a rough and tumble world. And I thought, okay, I can rise up. I can play this game. And I did play the game.
It was great and it was depressing and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed work leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment, but I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A good decision is always better than no decision.
You have to have truth tellers around, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Just seconds away until we start our cash equity trade. You are watching Bloomberg Open Interest. I'm Danny Berger. We closed yesterday at an all-time high, and we are on track to do that again with optimism over the war in Iran and earnings powering this thing higher. So we're up about a 10th for both the S&P and NASDAQ. Dow Jones doing even better. That's up 0.2%. And we've also been on this
obsolete. We have to wait, see what's going on. Are we back to settlement price at 89? Yeah, that would be a good trading idea. I'm going to take this one here, settlement price. Settlement price means the final price from the previous trading days. Always a good opportunity. I like these trades. They're very boring, very easy, but they make money. No. And you all, they're all head facts are to make things. Yeah, the web up. I mean, that's the point. I mean, people make money. Yeah, I think we have to do it. I would wait, Grim. I would wait for the settlement price here. And yeah, the short US and Davy, with them coming together with the point of control. Yeah, you could do that. Yes. I'm waiting here first for settlement opportunity. Grim, the question is, are we going first to day leaders or first to the settlement price? Well, I am keeping it my plan and ignore exactly the settlement price. That's what I like. You place both, yeah. Well, if I place both trades right now, then I'm getting trouble with my multiple contract. I have multiplier of each account, and then some probably won't get an execution. Anyway, I'm staying here, sticking it to my license. And on my page, you see still a large market order. Well, you cannot see any market order. That's not possible because it's really immediately executed here. That you would see in the bubbles here what is executed, right? When you put a market order in the market, you get the next best execution. So you cannot see them. It's impossible. You only can see a limit order or iceberg order. Toxic market here, short nesting long. Yeah, well, that's stops going up. Yeah. So did you get the trade here, Grim? Are you in? And you especially, Grim? You are in. Okay, then probably you should reach your profit target by now. Or, yeah. And just for profit, congratulations. Good analysis, good choice. Yeah, perfect. So, one. Grim, it's actually very simple trading. I can just follow these simple rules. Wait for your opportunity, get your trade, get out, turn off the computer, go and enjoy the sun and be happy. At least we have sun in the sky right now. So come on here, liquidity coming up around settlement price, all looking good. We just make the last two here. Oh, couple more things. Maybe another short trade day. Yeah, could be an opportunity. Let's see what's happening here now at the settlement price. Still didn't touch it. Yes, I'm planning to go long here at 89.5. That's a settlement price from yesterday. So yeah, market almost went to settlement price, but of course not to my entry point. Almost all week like this, like 1 or 2 ticks before the entry point, and even market is turning around. But probably now. I think can book my page with this signal or I'm going to wait a bit for art. Well, you cannot see trades and bid or ask, you can see orders. Yeah, that are buying here. You can see here to the right side, everything that is green, these are buy limit orders. You can also see a small example here right now. So a large single orders was all together like this blue line here on the settlement price. That means there's one big order. The other ones are smaller orders from different players.
Issues. Really, the toughest part of the transformation work that led to James Fraser becoming CEO of Citigroup in March 2021. They are through most of that. So the hope was now that you've given us a print of a 13% return on tangible equity, you can lift your return expectation. And that's what investors were looking for. That's what analysts were looking for. But the fact that they're saying that they'll get to this 14% to 15% by target by the end of the decade, by 2031, that doesn't set an exuberant tone, if nothing else. Right. Because look at their immediate peers. JP Morgan's already sitting at that figure. Morgan Stanley is already sitting at that figure. And if you look at one of the more recent examples, when you go back to Goldman Sachs to the 21, 22, 23 time period, they were in a bit of a difficult spot. A lot of their investments and balance sheets were not performing well. They had that consumer banking misadventure. And at that time, the bank said it does have a medium-term target of mid-teen returns, and it has already achieved that. The hope was that Citigroup can keep that same pace. Perhaps it's a way to under-promise and over-deliver, but the market would much rather that you overpromise and overdeliver.
That's maybe a tall order, I guess, especially for Citi. So if they've done the bulk of the transformation, they've done the back office, all of the various IT issues they have, what is left? What is left that the kinks that they're still working through?
It shows you the steep grade of the transformation. When you look at a Bank of America report that just came out before this Investor Day, they talked about the fact that when Jane Fraser became CEO, Citi had an F grade. Her transformation and the work she's put in and the team behind her, the work that they have put in has meant that now you can give Citi perhaps a C grade. So she's gone from F to C, but the challenge to go from a C grade to an A grade student, like some of their peers right now, is a much harder journey. And perhaps their more muted targets that they're setting today is a reflection of that fact.
By the way, for Wall Street as a whole, how much of this also just sort of flags that there's just a lot of uncertainty going forward? That yes, the first quarter was really strong. M&A results were strong. Trading was robust. But there's so much volatility right now that things could turn on a dime, that the geopolitical situation could turn on a dime too.
A, yes, 100% true. B, that's what we've been saying for the last 5 years, but quarter after quarter, the prints keep getting better and better for the banks. They seem to be in a good place. But no, that is a very important point. You can't expect that
mood and momentum to last forever. And when the cycle turns, you better be in a very robust and strong position. And to be fair, most of these banks seem to be in a good, healthy position right now. But this is the time that they have to make the most of the favorable conditions in front of them, because the underlying consumer economy still feels okay and good. The investment banking industry, when you talk about the trading division, when you talk about deal making, this is perhaps as good as it's going to get for some while. So this is the time that they should be firing on all the cylinders.
Well, it also seems like the pay reports, the estimates of what people are going to pay suggest that they're going to pay people like they're continuing to fire on all cylinders. I mean, the estimates are very strong for what Wall Street investment banker.
Yes, relative to what you were paid at your old banking seat, you are going to get paid a lot more. But then when you look at the competitive landscape, when you look at some of these bigger hedge funds, and when you look at other market makers like Citadel Securities or even Jane Street, the fact that a firm like Jane Street can pay its 3,500 employees, what was it, $9.4 billion, about $2.5 billion on average. No banks can match that figure.
Yeah, and I guess if you're trying to hire AI experts, you're like, what do I want to go to, like an old state bank or like a flashy Jane?
Right. So you go to that thing.
I'd assume so. Sri, thank you so much for joining. Always a pleasure to have you, Sri Natarajan. And coming up, Carlisle earnings missed as profit lags despite strong asset sales. We'll get into that next. This is for open interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Trading day is about to start.
You're already looking for that head.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Jones.
I'm Anna Edwards, and I'm from Madrid.
This is your opening trade.
Only on Bloomberg.
Tune in to Bloomberg Business Week Daily, magazine that helps global leaders stay ahead.
Conversation around your company.
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
Premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
Can't say passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The whole framework is shifting, I think, and I think it's really exciting, but it's not about the private or public. It's the whole valuation rubric and how you think about where you want to be in the strategic ecosystem of the business.
We're looking for good companies with bad balance sheets, and right now we definitely see some very good companies that we would buy at the right prices. We're seeing deals as well in the AI space that are, when structured appropriately, attractive investments.
I definitely think that the consolidation of our industry will continue, probably accelerate, given just the environment that we're in. If I look at across our four business line strategies that we have today, private capital, infrastructure, secondaries, and real estate, the area where we're still relatively speaking small is in real estate. I think where you're seeing a lot of the logjam in terms of exits are the companies that our industry paid very high prices for in 2020, 2021. That's going to take some time to unplug.
Some of the power players in private capital that I spoke with at the Milken conference in Beverly Hills, that of course was just the Carlyle co-president. Carlyle did report earnings this morning. They missed estimates even as asset sales picked up, shares down just about under 1%. Joining us now is Bloomberg private capital reporter Allison McNeely. Allison, down about 1%. So what went wrong? Because they did have a lot of asset sales. They did have a lot of realization. So why did they miss the targets?
So they didn't see those asset sales lead to flow throughs on carried interest to shareholders. It's a sort of a technical nuance, but essentially the funds need to pay out to fund investors before they can pay out to shareholders, and they haven't hit that level yet. And for a firm like Carlyle, which is very much a buyout focused firm, you need to see a lot of asset sales to start paying out that carried interest, which flows through to shareholders and then flows through to the bottom line profit number.
Is the direction that they're going in one in which gets us there? Because again, John Redette, who joined me, was basically like, our asset sales look so strong. And of course, there's always a little bit of book talking. Yeah. I feel like everyone that has joined us has said that the asset sales look really strong, but there has been a lot of clogging up in this industry of private equity assets that have just been sitting and unable to get sold. Does it feel like some of that is starting to free up now that we are starting to see movement?
I think Carlyle folks would tell you that, as well as others. We saw sort of similar language around with the KKR executives this week too. They also reported earnings. For those firms, again, that are very focused on private equity, they're sort of saying, we've got a great pipeline, we're starting to sell assets, so, better days are ahead. And then that sort of contrasts to like a more credit-focused firm like Apollo, which, is getting a lot of questions about credit quality, and they're taking in massive amounts of cash and sort of reassuring investors that the book is still performing. So depending on kind of what the orientation of your firm is, we're sort of seeing these two different storylines coming out of earnings.
By the way, just in where, private credit woes are still showing up, because a lot has been made of the argument that it is just about liquidity, that it's about headline risk. But then you see something like BlackRock, them continuing to mark down some of the TCP funds, some of their, the kind of legacy, not the new HP stuff. Yeah. Does that show that there still are further markdowns to come?
Yes, I think some people would say there are potentially further markdowns to come. I mean, I wouldn't know that, but certainly TCP has been a story for BlackRock. That is a fund that has had some challenges with the portfolio. We saw them do further markdowns this morning, and I think there are potentially markdowns coming in other BDCs as well, or at least that's what some folks I speak to in the market say, but it very much remains to be seen.
By the way, has the language changed? Per Franzen spoke to us at Milken and basically said, we're probably going to get rid of that word semi-liquid, that's going to disappear for this industry. Does it feel like people are trying to move away from maybe some of the old language they were using around retail products?
Absolutely, yes. We are definitely seeing a movement away from
Yeah, let's try it. They do have another short trade. So let's see if we can get this trade here. Congratulations, Grim. Yeah, well, I'm nice touch here at US Session VWAP. Somehow market up want to kill me this week. Not like I want. Yeah, again, that's why more pounds. Oh, come on, couple more hits here. Players, probably better to make it play the time. No, it's not in my type of day. Well, we have blue sky and sun, yeah. Also, what's now movers? Oh, I know it's not doing quite well. I can work and move yeah. Well, look, it's what's now is not so far away from me. You only need to drive 2.5 hours to take the plane and carry it. Yes. like you can take color. Oh, that's good. I haven't been one yet. Like to see. So come on, let's get this straight and oh, come on, Okay, I'm in. Let's create a daily bed. It's perfect, but yeah. And now you're going to kick me out again, yeah? Oh, okay. Okay, yeah, that's not my day today. Two losing trades in a row. We had to pull back, but yeah, not a bad one. So then let's finish for the day and see you next week, yeah? Bye.
Datadog, best performing individual stock in the S&P 500. That sucker's up 20.
City. Anyway, I picked grades right smack dab in the middle of the zone. This one's obviously. Uh, This is the whole idea behind this, right? Most of my trades, I have saying that we market push an ATR to show me what confirmation and what the event is, right? So I say that way. I know if I dig out top of my chart, but it's not. So I just go.
Right, Q1 validated. And Q1 validated.
Yeah, this big, I don't know if this is used or not. Usually done by. Crude dripping, I think it's usually a news effort. Can't control that, you just gotta put your trains in there. And then they have trades here for me. Two different types of trades that I take. I take position trades where I'm looking for bigger moves, and I take conversion trades. Back to the trade is more scalp, or it's very defined where you get in, where you get out. The position trade is
It's like a do not disturb setting.
See what I look for are stop ice better bets again. By trading in so see what kind of stuff. Watching your position really good shooting. Stepped out of the taxi. Out of the taxi. It's just 3 days. Straight up. Hotel. Yeah, great example. I got my curve. Never saying that. Never say a market can't keep going, right? Like, yes, the longer you trade and the more you sure you can't. Yeah. That's why I'm building things should happen. Anyway, when I put on the sketch team, this was years after the fact. So the sketchy I took here, so the spot we have on there, these are methods involved. Surprisingly, most of the time. One out of four keep going, so. All right, so I think this Gexy, like this is a decent Gexy. Takes the sexy Gexy, so it's that thing. It's just that right. I see it losing. I see it losing. You know, if you're going to catch it, it was me with an head. So I see the big money here too. It makes me trades most of the time. Yeah. This one again was already above the X3 and picked up straight up at the nine spots of this. Still. Trading everything that's fine. That's a trade. That strategy just trade on. Straight. So the trade here is 10 million for the trades. So what you're looking at on this chart is one the expert American. So I have certain thresholds for my markets too, right? I know what is a lot of trade stuff. As that a good example too. Yes, the big money selling here. Like if they would have put that in, look at the size of the bag. So you kind of show your hand. They show their hand. If they throw in 150 baht on the offer, these algos will run away from their order. They can chase it, and then they I'll just put all their bids in. They get a better go, right, and make this deliver chase keep up to sell. So that's why they that comes to. And the order book is looking like a 15, right? And then we trade in the first pay extra money for the effective like we get so I guess. My guess is they just my Stuff started coming out to that.
We highlight for itself, BW, 100 basically contract.
Nobody uses. So it's redneck. Yeah, it's like redneck now. Not. You're looking at. You would have outside of the top and balance up and down, market trading, the rest is not even real, like, feel what they did there one time, because you should have that. Don't get out, all these levels here are real. There it is. Right up to this liquidity. So they might have what's their proposing. The point is, you can see the real winner. Stop by the information. All right, so I will, there's nothing here for me to short because it was at. Oh, I'm eyes. I have an area here, except for me. Trace. Very, very. Anyway, this flow, this being a circle line, showing the hero, right? So it's going up and forward, meaning they're buying options. The dealers are on the other side. The dealers have to turn around and buy futures, right? So the newest inflation where they just load up the dealers and the dealers have to buy the futures or sell the futures, right? So you can see this thing moved and this move up, this went minus, and Breck and Spot Gamma developed this, obviously. Says a billion or more is significant, right? This means all 2 billion, right? Went from minus 500, almost 3 billion actually, went from minus 500 million to plus 2.5 billion. And that's exactly what this move is. And this was what just ran me over on that sexy Gexy. This thing moves like a market. You can't really predict what it's going to do. You can at times when you flow over. It's like I was talking about. But when you put on trades, you just gotta hope that they don't yank that hero up. And I guarantee this move started. Is that 347 Eastern, which is 647 my time. Right there. I can trade too. Actually got out money on that. That much stuff. I get told it. Anyway, this was pretty much the exact second that hero turned around from minus 500 million. So 3 billion dragged the NASDAQ up. 150 straight points, right? So again, you're at the whim. Like I said at the beginning of the webinar, this is the most unprecedented stuff I've ever seen as far as the incessant headlines, nonstop, every 5 minutes. We made a deal with Iran. Iran comes out, says, no, we didn't. We don't have a deal. We say we did. We don't, blah, 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 back and forth, right? Ping pong headline, they call it. Between that and then the tariff stuff, that's starting to come away too. And now this hero game, right? So it's like you just got to put on your trades and hope I say, hope you don't get headlined, hope you don't get heroed. It's just a very, very, very difficult trading environment.
Soybean sites for 5 DS, 215 contracts.
Let me turn my other computer off. I'm not gonna trade. I mean, if it's dead, I'll trade it, but okay, great. If you guys want, I'm looking at basically the big six right now, NASDAQ, yes, I have Russell, Google Gold, but the other, I have 30. But my other computer has all these other markets, right? I took them off my, I had two here. And in Arizona, you have just got to like a full pickup. Of course, I clean up my garage on sweep in and out of picking it up right now. Anyway, I got all these other products on here, like silver. So the great thing about the stuff iceberg information is it doesn't matter what market you're trading, it's the same patterns because you're looking at volume and volatility. That's what drives markets out. And volatility. So you get it, that's straight up the zone right to based on the price. This one. So maybe we'll go over trading. All right, so I still have trades burning here, right? So first of all, nothing for me to short off of this because we're at all-time highs. Chance.
That and by sell and huge 154.
Okay, sorry for that noise in the background. All right, we got sell ice coming in again. But what I was getting at before, this is a great example of the big money. And it's not always instantaneous either. This is something to note. First of all, I'll show you something yesterday I posted on X. At least paper's finally starting to engage up at these highs, right? This could be the top, at least short-term top, right? But this is a great example of big money selling, big money selling, big money selling. How's that working out for them now? It's not working out. We actually have a setup for this called broken ice, right? So I have 6 distinct setups. So anyway, they keep selling it and it keeps ripping higher. You got to remember too, a lot of times paper, and you're never going to know what these guys are doing, right? You don't know, are they getting out of longs, are they at the options? It doesn't matter. You just need to know the event area and how the market's that can trade around these events. Right. Okay, so we are at one. So there, I could short this potentially, right? So this is another strategy. This is I say usually when you get to extreme standard deviation or VWAP, that alone will help, get some that's not even okay. So this thing just keeps going higher. The Ludwig levels are another incredibly powerful thing. That's right to the Ludwig level. But this holds, right? So this event that just came in here, this turned bearish. And this is how I usually trade. I wait for it to show its hand, and that we can see the R, which is going to be 8.5 points. And 8.5 points every 5 minutes. I'm with a 5-minute ATR.
Unvalidated.
So I'm not. I don't have anything on here. It still makes me mad about it. It's just so bad. You're in the market, so you was rational. All right, so I do have an A+ reversion with me here too. So take reversions off of this new guy. So remember, this is a great example, right? So I'm looking at all these things saying this could be a stop movement, right? Did you see me jump in the short? No, because I have rules behind this thing. And not only I said these areas are possible stopping points, paper with telling too. Did you see me jump in a short right now? No. Why? Because my position trade is I can show its hand, meaning you tear out. Pushing you tear out, that's the line. Then I would have taken the short. Didn't, I never put on in short. I was gonna was contemplating level according to your trading strength. These are my important areas I will provide.
Prior and Q1 retested.
See if I can single-handedly stop this rally. So I'm going to take this A+ reversion here. This is actually a very good trade. It's got to get to multiple of them. Okay, and I think I can make history. We got to stop at the tops of the market here. Yeah, I know 3 years for their closing trade. You're seeing here. So we go. position trades. If I'm going to take a short, I get it at the L and I risk to the closing company prices. So I trade to help me withstand the out. But if I'm not five, man, the one I have been. That's great. Eventually, I don't be small. Doesn't matter. That in its own right is coming. It's just like was and they have cheap the plus these lovely levels. So doing this means flourish. If it has enough energy to push through and build new ones, it's telling you something, right? What should happen? This is what something should. It's just the main. It should hold prior red, but it just clustered through production of the other. So here and then your expectation when you get your pieces is it goes to it's red. If it can't hold, then that's expectation. That's what I call it. Right? It's just even okay, so I have a trade for that as well. So if this fails, I can look at it. It's called the grip note. Extreme check. We're managed to the entries of that and the way prior to that production on the other insurance take that direction. So it's fails. I could take the I'm still alive. Okay? I could take the version no code maybe we'll sell off one once they get up. Anyway, I could take the conversion. We can do that later. So I have different types of conversions too. I can take the vacation trade. But quickly again, I'm always assuming I can talk trade. So if someone drawing to so right now we just got 5 nice stocks, right? That's the event. And then you have the MTR, which is how I determine sugar pieces. It's away from this and it's how I determine again. Where I put on my trade, my trade. Push outside of the position. Looking for like I think it's this big one, right? That here. Stop. This was a stop. Entry. There's a stop. Here we stop. So anyway, that's what you're looking at on this chart. And then you got the heat map, and then you got the getter one. So that's all it is on this chart. I know it looks like the twin is, but it's very simplistic. So anyway, that tagged the one ATR. If you're stop, you never been stopped out, you're out of the zone. So this is a great trade for beginners, for traders that want to kind of condition themselves in this sitting in trades and sit through and shop. And it's also mentally easier for traders too, because when you get in position trades, you get in a trade where you're looking for a big move and you got to go through this 5 times on most of the trades. Everything traders that just jump in and just back to the zone you're out. Right? So that's where it's meant to be. That's how I trade it. So that's what I'm looking here. I have working here. So then there's trades where you can learn trade where you can take it. So there's you can take them. Or you wait for it to back up. Or you like to get stuff. This one is an A plus for version because the entry is in a prior means. Traders can hear that now it's engaged. Right. So the sellers in here, I mean this piece nicely. Because common sense, human nature, and a lot of guys hold their breath and then step out and I'm like, okay, I'm not going to come back and then get out. And then I'm talking about he's out with every that he walking. Anyway, I'm working, but I'll take one shirt and work here too. Outside, direct to market, but yeah, right away. I took the reverse right off the bat. This is a very characteristic move, especially lately for us. So I don't know what that'll happen here. Usually, when you see these types of this 250 straight ticks lately, you can see my entries actually like I lost twice. I don't know what the hell this was, and I'm saying usually you'll see every relative volume and you're like, okay, that makes sense. But I was watching this and I was like, I'm okay taking this, right? Because it's my strategy. They usually work. They work more than they don't. That's what it is. Whatever the hell this was, and there was no real relative volume. My serum chart's freezing up for me. Anyway, if it colors yellow like these over here, that was the ordinary night, it's up to 200%. It's more than 200%, then freaking money that way. You don't want to but I didn't see that kind of smooth down. So I took it no matter what it was. Like on my command, took my trades and right. So the point is, if you have an ad and a strategy, you take them every single time. So I took these. I was wrapped up in these and I missed that NASDAQ trade, right? So I should be basically 1 and 2 on the day for the reversion, right? Instead, I didn't take this one. Be consistent. So the traders, this is one of the reasons traders don't make it because all research advice, right? Like I took a loss. But this isn't why I didn't take this. I just missed it because I eat up on one validate and fixing them to have a trade about that. But the point is, if you take a loss, and then you get the setup, and you're like, oh, I can't take another loss. And now I won't, right? So that you keep playing until if the extra limit for the day. I mean, you're going to have days that just things just don't make sense, and like that Russell, like I don't know what that was. That is so good. I mean, that's like the biggest download in weeks. I don't know what doesn't matter what happening. Find me another bar that looks like that on the my point is, that's what we talk about every single time. Most of your trading days are going to be like this. What do you need? Like a trading chart. There, right? That's what usually you're look like. And then you'll have a big day. Could be a making day, a month making day, you're missing day. And back to that. You have to understand this is what trading is. Newbies that come in here think it's like a job where you just punch the clock and you get paid $500 every day. Whatever amount you think in your mind. That's never going to happen. You're never going to come in here consistently make money every single day like a regular job, right? You can average that, right? So say, I want to make $1,000 a day. I hear this all the time. I'm going to make $1,000 a day. That's great. You can average $1,000 a day depending on your sizing and your account size and risk and everything else. You're not going to make $1,000 a day. It's just not going to. You're going to have losing days. Everybody at all times, unless you're like Goldman Sachs, that makes them, they make money. I love when they come up their annual report. They made money 198 out of 200 trading days. I mean, aside from that ridiculousness, retail traders, you're not going to make money every day. You can average that, right? So you can get make money. It's huge. Point is, you never have that because when things aren't working, you just stuck to something. Right? I make it sound very, very simple. It's not that simple. That's why you guys heard my story many times. I had different days where I lost $800,000 in minutes, 2 different days, a month apart. And you think after the first time I would have learned my lesson. And I don't like telling the story, but I just like telling it to you guys to save you guys the anguish. And easily you can do it and just like
verify ND 150 contracts.
Where you're just like, screw it, I don't care, right? You get in that mode, and then for me personally, I would wake up the next day after I lost, the first time I lost the 800 grand. I'd be like, what am I? Who was that first? What was I thinking? who cares? Like my stop loss limit was supposed to be 100 grand. I was supposed to stop myself. Then I had a risk manager who didn't really manage risk very well actually, who was still supposed to stop me too. What that was called negative reinforcement, right? That's negative reinforcement. It happens in trading too. When you do something wrong, you can get away with it, right? So you say you put on a trade here and you're supposed to stop out here, and the market rips up here and you pull your stop, you're like, ah, screw it. And then I'm not going to stop out here. I'm just going to hype up. And then it turns around and goes back and you get away with it, right? So what are you going to do the next time? You're going to pull your stop and say, ah, screw it. And then that time is time where it's up and paying for it because that's called negative reinforcement. Same thing as being a trading and risk manager for my firm, because there are so many days where I would be on tilt. I would go, it was my law way from the last go down to my land. They would cut me in like they're supposed to because I don't know any day I couldn't do it until myself. They did something like start sunshine the rainbow until you're in your position to stop and it's not. But anyway, they would shut me off. I'd go take a break, go to lunch, whatever, come back in the afternoon and say, hey, give me 50,000 more.
Long validated.
If I lose that, I'll be done for the day, right? I'm not in the right mind. And so many times I would come back and make that back and actually make money on the day, right? So they got to a point, negative reinforcement, right? Where they would call me, right? So I'd be down 100. Both times that I lost 800, they call and I'm sitting there, I'm like, dude, I'm in a trade. I'm fine. Hang up, and they wouldn't stop me, right? And then I would turn 100 grand into 800,000. Happened 2 different times with them. So the moral of the story is, you may think you can control yourself, and you may be, and most people when they get pissed off, you're not going to be thinking rationally, and you're going to go out and so that's a way to avoid that. Is find a broker, you can do something, make it for the day. Always predetermine your loss limit, right? Get it for the day, you're done. There's always another day, right? There's many days later. Definitely not having time I lost limit right now, but it doesn't make sense. This is so, especially in this environment, right? It's finally turning around now. But this kind of move, just straight like this, happens 1 out of 50 times. Like I know you're going to have to give some stuff. So I'm still working this thing. This is the newest, game to the newest pattern. Markets rip and then just sit this week. Just wait for the next level. And then rip the other way. Then run over and sit and make the next level. So this was happening. This was it could have been. Just sitting trying to hope this order is really working here, by the way. Stuff on fire yet. 15 minutes just waiting for this market to move for this. Yeah. So I mean, for this, I could take the reversion off of this. I'm back in black. You see all these guys over here. I literally just said, you know what, something is off in this market today. I'm done. But these are areas that I talk about where different types of reversion trades, where you can wait for it to bounce off something, like it bounced and finally bounced off, put support, which is also an IW level, ATM, spot gamma. It bounced off there, and then you take the corresponding ATRs. I don't even do this because I got so pissed off at this and maybe missed the next. I got this here. Right now. I'll take position trades, especially if a new event fires off. I'll take trades. I'm just not going to continue to put on reversion trades back into this. So. There. Yes, so I did draw this stuff at the open here. It's like, yeah, it's strange. You don't really see it, especially in the I think that's these were threshold. So contract. So you can see here, so we have as well. But both of these got very next. It's all version.
800 per contract.
Right, so does that mean that this market's going to stop? Well, we're going to stop the Nasdaq, but it is telling you something. It is telling you something that you're seeing sell ice first in both in the Nasdaq and the S. So at least the sellers are finally starting to engage. The big money's finally starting to sell. Maybe we'll get some normalized markets where they move both ways instead of vertical every single day. So you can see this is still coming in here. This was 1,300. So this we got over $3,000.
163 contract.
And then here, yeah, get to the point. It's like you can get as mad as you want about the manipulation and blah blah blah. You get to see what's going on, right? And by the way, this is canceling the phone because I'm gonna know that I start the process. So I never got pulled. That's all I see. So they start the little process over. There's diversions and potential position trades there. We got 3,000 sell ice a year. Technically, this is a here. Very good. So this is good. This feels awful. Right? This feels like I'm getting right. You know what? I'll give it a second. I can push this through here. So this is a sexy Gexing, same one I took in Nasdaq. This is my point, right? I just lost on the Nasdaq one. I got to put this one on. Just add these two Gex levels. But it's kind of already through it. Remember, these aren't exact prices to the areas. And I give this a second. If it can pull back in here, I'll probably put the sexy Gexing short on. I'm not going to take my shot at 3,000. And I can trade bigger size too. So you see on the underwriting tool, it gives you your sizing for position trading. So that's if I'm entering down here, show with my stop here. Plug in your risk. Right? So here, stop it before I get down. Domestic sexy. So we follow these. If you lose, they're called the Gexies. And that's you gotta laugh, guys. You gotta laugh. It started out with 9, especially with this ridiculousness. Seems to my stop. So this is a better entry. So I think I should actually even trade more than what I was getting at. I'll show you some stuff there. They put on 0.6. If I'm entering here, so obviously if I'm entering way up here, I could put on more. So I can actually put on more than 8. Right, so I had the sexy Gexy short on, so this is a great example. This feels awful. I just got run over on the sexy Gexy and Nasdaq. So I'm skipping this just because I feel like it's not going to work. No, I just keep putting on. You guys have an edge. It's the best edge I've ever seen in my trading career. Got my third event and behind them, we keep putting on a trade. If this one loses, and loses. The next one loses, and loses. If I have my limit for the day, I'm done. Like that. Something off today, stuff not working today. I'm fine with it. By the way, I'm combining these two as well. So if they're right on top of each other, and this is clearly the same house, right? Out of nowhere, someone comes in selling 3,000. So I just this is another thing with this anchoring tool. You can now adjust it without T and scroll top, bottom. That area up here. Okay, one strategy. What other area do we have up here? And this is so these are my weapons on that I trade. That's about it. Balance areas I line those balance areas. Directional conviction and by someone else like it's just an ordinary iceberg events to trade. Well, usually it's supposed to be the fade trades, right? So like say the market actually ever sells off again, and I get an event in here that turns bullish, meaning pushes the ATR out. That's how they're meant to be traded, and not meant to be just I do that. I wait for the events. You already know your areas too. You don't want to be scrambling like I am right now to find out where the hell we are because you might miss lots of trades, right? So with no Izzy, I put on the Gexy. I got nothing. So I have there are other areas, market profile composites here. Right? Nothing there. They're at extreme standard deviation of VWAP, and I have a trade for that, but it's got this stuff. So I got nothing to short here besides this. So somebody keeps selling an ASIC, somebody's selling an ES. Something is gonna stop, no, but you gotta remember too, like I said, bigger money a lot of times is longer term players. It is worth noting this area, you know, so if this does hold and then break it over, notice from next to them, you see. I say, okay, heads up, you know, this could be the, you know, again, this is the most in the last 2 days. So yesterday I posted it was 5,000. Today that was.
Like size for 150 pound crab.
Yeah, so it's the same area. So yesterday someone came in, sold 5,000. Whoever bought it below and watched this ridiculous. Again, you don't know what they're doing. It doesn't matter. You just want to know they're in. It's 5,000 yet, over 5,000 yesterday. Right, but I just said most I've seen are only one time. Now you got another 3,000 coming in real time. Still not holding, of course, because I got Gexi on, but. So I'll take reversions here. The only short I have strategy is next to Gexi. It's going to turn it.
I heard we had one elevated.
There's just no fear to buy it, like none. It's like, oh, really? 3,000 sellers? Okay, I thought we were running right up here. One, two. And so reversion wise is really nothing for me to taking back and glad for it. As I can do, like the price change game. So the market goes map here. So I see in this. Right here. Right. Marketplace. At least this is they built marketplace for my app like 3 years ago. Right. So I said I want a better version of this. So marketplace is tick strike on steroids, but they come out with all these different algos. So they're very, very useful. Right. So yeah. Use the limit pressure, line pressure, and so it's went side by side. You just pick the and if you want to see the net, the imbalance, that's just the net. Take imbalance. I like seeing it. So anyway, you can see here. So this is a 5-minute piece of tape. But this is tape. This is being considered tape. It's coming in and size. So that's combined. And you can see that. That's what triggered that iceberg again with the eyes, right? The big body triggered the iceberg. My point is, I'll take these reversions, make it, if you will, and progressive, get my scene, my trade. And the price change out. So that's an opportunity to think about environments. Everybody's not anything, start to slow down the stating. You could trade off this again. This is when it's got type of trade. Way to get a little bit thicker again. See every time this thing price changes. Price change. Not much there. The deal isn't we'll watch this as it's occurred, right? It worked until it doesn't work. A great example of it working. When the big money is in here, the price change out was still playing the game, but they get it on over. Look at this, how's this price change? Great example. If you're like, I'm not playing price change today. No, yeah, I think there's going to be a scale. Oh, this thing price change for 2 minutes. Right. You just got to know if you're going to play this on its own. It's fine. I'm too old to play the scout. You know, back and forth, back and forth, back and forth.
Yes, long defense.
Scout around my position. But you just got to know, like right here, just work right there. Right, price change. Use that will snap it back. It's a price change. I got to snap back again. Here, this is what I do with this guy. So I'll play price change game with partial on this. I usually leave for me in my favor, meaning it's profitable. Then when I see that and they do an ordinary area, I'll talk about. I'm not going to make it. game. So we'll do this with this guy. This is, I don't do it, but it's not profitable. Right. You know, this thing gonna pop back up because that's what it does. It goes straight up. Um, so, I'll take these reversions. I'm gonna watch here though. Same price change game that call it lecturing where you get price change and then the opposing, like they're buying. So watch for that here. There's no plus reversions now because the 8+. Yes, these are very high percentage reversions and it's gonna bounce off these and come back. Why? Well, because you have all this activity, these traders caught, whoever sold them, they're not feeling very good, especially the big money. A lot of times again, when it comes there, when they want that out, they're like, oh, they're wrong, So I'm probably gonna take these. I just want to, if I see heavy selling into them, I'm gonna take them, but this gets you back on. Price change back up. Yes. Got it yet. Could be going here. This is the courses is teaching you everything when I'm doing it. Like 5 years of experience. Here's his own drawing tool. I'll get into this stuff here. But you need map, click on this, you just click on it and it brings you to the page. It's just discounts for the basic software. And then you need our you got your automation shows the speak and everything else. But you need the MBO data, right? So you need this add-on for bookmap to see the stop iceberg information and marketplace and everything. So you can see where it includes here. But then we'll add on sub chart, icebergs, on chart. You need the on chart from the zone chart, so drawing work, right? So you can't just get my zone drawing tool. You got to have the MBO data. Tracker, trigger map. I use right. Gotta get that back. People are like, oh, these expenses. There's some things you can script on the charges, and not pay. Kind of like this, I used to crack and think or swim, because when I got back in the business, I was trying to cut costs with it all, and I still will cut costs. I used to pay PQG $800 a month for charting. Like I didn't know any better when I first got in the business. Like you don't have to pay anything for charting. You get like something like this, think or swim, and you put money in there and you can pull it right back out, and then you get access to the charting, right? So you can use trading view, you gotta pay something for that. But you can't pay $100 for charting. I wish I would know. I just didn't know. I didn't know what I didn't know that time. All right. So here this price change again, but I'm not good stuff. I was saying about that. But it's a good example of let me just say, hey, see what I did. I saw that price change and I'm like, okay, well, it's going to favor pop back up too. If I get a price change here, I mean, this is my stop. It's not much, but I'll put it back on. And then I got reversion in here too. Yeah, let's see here, like green. Watching piece of tape here. So this is interesting, right? So the first time I'm here, I already reacted 8 higher. I'm gonna do here place to the side. Here's my size.